Hey, it's Andreas, and let's talk about Tellurian Inc. today. And shout out to Alex Bastos here for suggesting this while I was on Easter vacation. And for those of you who have never heard about this company, they're a neutral gas company doing developments in this sector. As you can see, they have a market cap of about 3 billion, and then in terms of revenue, 0.07 billion. So they're quite highly valued right now. This is a high risk, high reward play. A lot of the success of this company is hanging on capital development, as I will go more into detail on for this video. And we can also see that in the annual report, the 10K for this company from last year, 2021, they get approval for phase one of the development. So a lot of the success of this company is hanging on this specific development. I will go over some highlights from the annual report and give you my thoughts on this company. But first, let us take a look at what's been going on with stock performance and revenue. And as you can see from this graph here with circles on to the left on this PowerPoint slide, Tellurian has underperformed both the current peer group, the prior peer group, and the Russell 2000. So in terms of performance of this company, it's been not that good. In terms of revenue, we can see that they're scaling up right now. We can see from 2018 to 2020, they have had very good growth numbers, and we can also take a look at recent quarters here and see that they're continuing to scale up. And in a slide in the future, you will also see that they continue to broaden their offering, not only selling the pure neutral gas, but the liquefied neutral gas. Doing refinement of a commodity gives you a higher sales price. All right, in terms of operations, they're still not profitable. You can see total revenue here increasing from 2019 to 2021. This is in thousands of American dollars. All right, same numbers as you saw, 0.07 billion here in revenue for 2021. And you can see that in terms of development expenses, this is almost as large as total revenue for the company. We also see some very expensive administration. I will go into more detail on that on a later slide. But what I want to comment on here that's not in this part of the 10K that I chose to show on this slide is that cash flow from operations is indeed very negative, but it's being balanced out by the cash flow from financial activities, meaning that they're issuing bonds, they're also doing some dilution of shares and some bank loans. So they're financed by loans to do this capital development. A lot of leverage can be good, as if the developments are successful, then return on equity will have a positive impact from this. All right, so general development activities here, this capital development activity. They recently got the regulatory approval here for phase one in 2021. This is the comments from the 10K once again. And they're commenting on that building out this will be costly. And we also see here the name of the project, the Driftwood project, where they're talking about pipeline, they're talking about terminals where they can liquefy the neutral gas, and they're also doing some comments on the liquefaction capacity here, and 27.6, and then the unit of gas here. All right, so a lot of the success of this company is hanging on this capital development activity. The company has very low revenue right now compared to total market cap of the company, and a negative price to earnings. So legal activities, getting the approval for development, making this project a success is what's gonna make or break Tellurian here. So very high risk, but potential for great rewards. I commented on expensive administration here. As you can see, general administrative expenses are greater than total revenue, and this is warranted given that it's costly to seek approvals for these type of things. And if we look in the annual report, they comment a lot on legal processes and on the risks. You can also see some share dilution here from 2019. If you were a shareholder, you would have almost half of the slice of the company that you had in 2019 in 2021 in terms of shares outstanding here. So some share dilution indeed. But this company, small company still, 3 billion, it's a small company. They're doing development. If this project is a success, which I hope it will be for the shareholders, and I think that the macroeconomic trend right now is favorable upon liquid neutral gas, as we're trying to get off Russian oil and gas here in Europe, and more projects like these that can provide supply to the market is a positive impact on humanity right now. So I very much hope that the project succeeds. In terms of me investing or not, it will be a no for me, and this is because I don't understand the American legal system enough. Also, I'm a European, so I don't have great business knowledge of how business is being done over in the US in the neutral gas industry. I haven't followed along on any reports over there. I've been taking a look more on Nordically operated and European companies doing indeed some operations around the world, but the US has not been my main geography. However, in any case, I hope the people invested make a ton of money. And whatever investment you do, I hope you make a ton of money. Take care now. Bye bye.